Welcome to the latest installment of Moo's Insight Exchange webinar series. I'm Justin Zaks, Vice President of Strategy at Moo Technologies. Today, we're going to be talking about the recent launch of spot Ether ETFs, as well as some of the general developments in the cryptocurrency market, including an update on current trading in Bitcoin ETFs and some insights from the recent Bitcoin conference in Nashville. I have two very special guests with me today to discuss these topics. Please let me welcome Megan Rust, a senior ETF Capital Markets Analyst with the Capital Markets team for Franklin Templeton Investments, and Christopher Jensen, the Director of Digital Asset Research for Franklin Templeton's Digital Asset Investment Strategies Group. Megan and Chris, before we dive into the questions, could you let the audience know a little bit about your backgrounds and what you do at Franklin Templeton?
Sure, I can kick that off. Thank you so much for the warm introduction. I've been with Franklin 8 years now and working on the ETF Capital Markets team ever since. And that team, what we really do is oversee all things trading, liquidity, create, redeem, and ETF structure. So the last year and a half has been really exciting for us because first starting with Bitcoin and then joining with Ethereum, we've been able to, learn a lot of new things, and it's been very exciting.
And my name is Christopher Jensen. I'm with the digital assets team at Franklin Templeton. So we really think of our kind of mandate as twofold. We are active builders in the space. So we have blockchain engineers in-house actually building products in these ecosystems. And then we're investors in this space. So in addition to ETFs, we have things like venture capital portfolios and token portfolios. And what I do is kind of head up the research team in effort to dig into what these protocols actually do, how do the tokenomics work, why is there a token at all, and how does value, if the network creates value, how does it get back to the token? So we have a team of fundamental analysts as well as kind of data scientists looking into these protocols, and we really think of this entire industry as there's this transformative technology, right? Distributed ledger technology, blockchains, and then you have this new emerging asset class, digital assets. So we're really excited both in what the technology can do, as well as this new asset class that investors can get exposure to.
Well, thank you for that. Some really great backgrounds from both of you. I'm looking really forward to talking to you today. Just a little bit of housekeeping before we get started. A replay of this webinar will be available in the live section of the community on the Moomoo app shortly after the broadcast, as well as on YouTube in a few days. So don't worry if you miss out on anything. You can get the replay. Make sure to go to moomoo.com/US to check out our current sign-up promotions if you're not already a client. Viewers can enter their questions in the chat, and we'll try to get to as many as we can near the end. Please make sure to watch all the way through so you don't miss anything. And if you enjoyed this webinar, please check out the live section of the app under the Discover Moo tab to sign up and remember and set reminders for more of our upcoming informative webinars. So now let's get right into those questions, and we'll start with some of the basics. What exactly is the Ethereum network?
Sure, I can take that one. So you can basically think of Ethereum as a global decentralized computer. So one that consists of a network of many individual computers. We call these nodes. And they work together to create this unified platform. And that platform supports the execution of all different kinds of programs. We call this and refer to smart contracts. So this enables programs with a variety of use cases and kind of end markets to be executed in a decentralized and a trustless manner. So the important thing here is that these programs can execute and be carried out without a centralized authority or middleman. So a lot of times I get a question like, what actually is the value proposition of a blockchain? And one of the key value propositions is that because you can take out the intermediaries and they can act in this kind of trustless fashion, you're really decreasing that cost of trust. That and the ability to have things like programmable money enables new use cases. So it's kind of like Bitcoin in the sense that there is a blockchain and we're adding new blocks to that chain. But whereas Bitcoin is what we call an application-specific blockchain, it does kind of one thing and one thing really well. It keeps track of addresses and the amount of Bitcoin associated with those addresses. Ethereum can be thought of as more of a general purpose blockchain. And that's why you get use cases such as DeFi or decentralized finance, NFTs, kind of Web3, metaverse applications. All of these different applications can exist on something like a general purpose blockchain like Ethereum.
Yeah, and you talked about that all purpose, of Ethereum, and sometimes I hear about these networks like layer one, layer two network. What exactly does that mean?
Yeah, it's a great question. So when we refer to Ethereum or something like Solana or Avalanche, we're really talking about a layer one kind of a base blockchain and ecosystem. Now, depending on the ecosystem, they have different views and roadmaps in terms of how they're going to achieve scalability. Because the end goal here is that we think big portions of our financial services industry, of the internet, can move over and actually exist on chain. So to be able to accompany or allow for that level of volume and traffic and users and transactions, these different blockchains go about and think about scalability in different ways. And so with Ethereum, part of their scalability roadmap is to have this concept of layer two blockchains. And one of the ways I think about this is rather than be like a direct to consumer business where it's just us engaging directly with the Ethereum blockchain, it's kind of morphing a little bit to a B2B business where other blockchains and applications, they're the ones actually interacting with and writing transactions to the base layer. And so layer two blockchains, some of the more well-known ones are Arbitrum, Optimism, Coinbase's Base layer two. These are all layer two blockchains and ecosystems that exist kind of on top of the Ethereum mainnet. And what they do is they allow transactions to happen, faster, cheaper, and then they kind of batch process. They write those down to the Ethereum mainnet. So this concept of Ethereum being the layer one, and then these layer twos on top that help the Ethereum ecosystem scale and bring down things like costs and increase efficiencies.
That's a really great explanation of the network. And so now I'm thinking, I have an understanding of this network, but now there's spot ether or ETH. What's the difference between that and Ethereum?
Definitely. So when we're referring to the blockchain or the ecosystem here, that when I say Ethereum, that really refers to the blockchain and the ecosystem. As I mentioned, the investment team at Franklin Templeton, one of the things we do is we look at tokens to kind of think about and to put into portfolios. So the digital asset here, that is the kind of native coin to the Ethereum blockchain and ecosystem, that's Ether. And the ticker, so to speak, would be ETH, so ETH. And so for every one of these protocols, when there is a token, we have to think about why does that token exist, and if the network generates value, how does any of that value get back to the token and make the price go up for fundamental reasons rather than just for speculative reasons. So bringing it back to Ethereum, Ethereum is the blockchain and the ecosystem. All different kinds of applications and layer twos build on top of Ethereum and interact with the Ethereum blockchain. And any one of these transactions, there is a little bit of gas spent. There's a little bit of a fee to interact with the blockchain. And that fee, the kind of currency of that gas fee, you end up spending ETH. So to engage with the Ethereum blockchain, you need ETH in a wallet, and that ETH gets spent. And so then I have to think about, okay, what are all the use cases that are going to interact with the Ethereum blockchain? How much, fees are going to be generated off of that, all that economic activity, and kind of what percentage of those fees paid in ETH, actually kind of flow through the network, and how does that get back to the price of ETH? So that's kind of how the token relates to the blockchain of the protocol.
And that's great. So we talked about the network, we talked about the token, and I guess the real new part of this is something people might already think about in a different way, and that's the ETF. A lot of people think about ETFs that contain a basket of stocks, but this is something different. How does the ETF work, and what's actually in this ETF?
Can take this. So it's interesting. The Ethereum ETFs are structured as 1933 Act funds by the SEC. And what that means is they're essentially regulated like commodity ETFs. So you think of spot gold, spot silver, any precious metal, these ETFs are regulated under that same framework. So they are only allowed to hold one thing and one thing only, and that's that underlying commodity. So what's interesting is I think a lot of investors are confused whether or not the funds can hold cash or the funds can hold, futures or any type of derivative products. The answer is no. And what's cool about ETFs is they have daily transparency. So you can go onto our website and type in easy ET for Franklin Ethereum, and you can pull our holdings from last night and you can see there's one line item and it's just Ethereum. So it's very efficient, and that's also, I think, why these were so revolutionary, because now for the first time, you can have really efficient and accessible Ethereum in your brokerage account in a spot Bitcoin or a spot form.
Yeah, you talked about some of that efficiency. And so I think what a lot of people are wondering is like maybe they're already buying this Ether outright, or they could buy it in the ETF. What are some of the advantages and disadvantages of the two ways to do this?
Yeah, so I think, at least from our perception, the advantages so far have definitely outweighed any problems or any cons, so to speak. I think accessibility is a big one, right? Like the ability for you to be able to now get access to these underlying currencies in your brokerage account is huge. It's efficient from a pricing perspective, it's efficient from, a reporting perspective, from a tax perspective. A lot of times thinking about security with individual wallets people don't want to deal with. So now in your brokerage account where you have your other mutual funds and your other stocks and bonds, you can now have exposure to Ethereum and to Bitcoin very efficiently. We for years have had futures backed Bitcoin ETFs, but the problem with those is roll costs associated make them not really a great way to get exposure to the underlying asset class. The tracking is not great. If you look at the performance of the underlying versus the ETF, you see
I'm just going to stop you there just so our viewers understand. When you talk about roll costs, what does that mean? I think not everyone knows what that is.
So, futures-based ETF is basically using derivatives to gain exposure to an underlying asset class. So a futures, Bitcoin would be using futures, exchange-traded futures, essentially, to get exposure to Bitcoin, but they couldn't actually buy the Bitcoin. And the problem is futures roll over monthly, and when that happens, you have to enter into new contracts. It's a very costly rebalancing, so to speak. So now, instead of having to buy ETFs that are using those products, you could actually buy ETFs with exposure to the underlying cryptocurrencies.
Right. And you mentioned that these ETFs are registered, under the Securities Act. Are there required disclosures, and how does that work? What are the disclosures, and what can you gain from those as an investor?
So similar to a lot of other ETFs, there's a lot of daily disclosures that are required, right? So you can go to any fund provider's website and you can find, day of holdings, bid-ask spread information, asset information, flow information, whatever it is you may need. But the beauty in all of that is really the transparency, right? Like you have full knowledge of what the fund owns, and you can track its performance pretty efficiently too, right? So you can see how the fund is doing in comparison to either Bitcoin or Ethereum because you have all this information available to you.
And this is a relatively new thing. When did these launch, and how has it gone so far?
So the Ethereum funds all launched only a couple weeks ago, so July 23rd. The slew of Bitcoin funds launched January 11th. So we've had some time since then. I will say from an issuer perspective, Ethereum was a lot more seamless of a launch because we spent a ton of time and resourcing building out the framework and the ecosystem for Bitcoin that really fit very well for Ethereum as well. We're in a traditional finance world in Franklin Templeton, so creating a way for an ETF to operate with a digital asset was very new to us. There was a lot of complexities involved in that. But overall, all very exciting, and we're so excited. I think the Ethereum funds have been a little bit slower from a fund flow perspective than Bitcoin were. But if you look at the market cap of Ethereum versus Bitcoin, that does kind of make sense. Our fund specifically, I think it has had inflows over half of the days since we listed it. So very, very consistent traction, very consistent buying. So we really have been very pleased thus far.
Now it sounds like a successful launch so far. And you mentioned before, you talked a little bit about, you don't have this roll cost. So are there fees involved in any of these, and how does that work? And, what type of fees are usually involved?
So the main fee here is the management fee. Most of the funds are very competitive from a fee perspective, which is also, I think, why the spot Bitcoin and spot Ethereum funds gained as much traction as they did. But in my ETF capital markets world, I work a lot with clients to make sure they're getting the most efficient exposure to underlying markets through ETFs. And what we've seen time and time again is fees are typically going to be your biggest detractor from performance when you're looking at what the underlying is doing. And especially if you're thinking about Bitcoin or Ethereum that have the potential to really exponentially grow over the next 2, 5, 10 years. If you look at scenario analyses for higher cost products versus a lower cost product, the hits it takes to your performance is quite substantial. So I always say, really understand and look at the management fees of the funds you're buying, because if you're a long-term holder, that is going to be the biggest differentiator for you. At the end of the day, all of these funds either hold spot ETH or spot Bitcoin, right? So you're getting access to the same thing. You have to figure out what's most important to you. And I really think that the fee component is something that clients really need to be taking into consideration.
Oh, that's very informative. A lot of people don't think about those fees all the time, but they can be super important. Just as taxes too.
Yeah.
So,
Yeah.
what is in terms of this launch? What does it mean to the legitimacy of cryptocurrency generally in the United States?
I think from what I'm seeing and talking to folks, it's not just now digital assets as something to be traded, but actually this idea of, hey, I can buy the ETF, put it away, kind of buy and hold. And you mentioned taxes. I think that is one of the advantages here. If you're doing it in a taxable account, and obviously none of this is tax advice or financial advice, but if you're doing it in a taxable account, it's a lot more simplified when you're dealing with ETFs than actual native cryptocurrencies, right? The tax kind of guidance for dealing with native cryptocurrencies is much more complicated and messy and evolving. But with ETFs, that's a known framework. It's simpler, right? But then the ability to put these ETFs into a tax advantaged account, like a Roth IRA or something. So this idea and this mentality of buying it and holding it and getting exposure for this secular trend of what's happening with blockchain technology, and really its transformative impact on the internet and on the financial system. I think it's huge, and so that legitimacy is created with the ETF, as well as mechanically now you can actually take the ETF and put it in something like a tax advantage account, which is, I think, a huge benefit.
Great. Now, and I just want to remind the viewers here, please feel free to keep typing those questions into the chat, and we'll try to get to a few of those here live on the air. And this, what a lot of our viewers do want to know about, they're interested in the new launch. They're also very interested in Bitcoin. So, this launch follows the January debut of several Bitcoin ETFs, and they now have a little bit longer track record. They've been trading a little over 7 months. How's that going? How has the reception been over these past 7 months for Bitcoin ETFs?
It's been great. That's no secret. It's dominated most headlines, especially back in January. I felt like it was all we could see. Flows specifically kind of blew past everyone's expectations. I think the net flows since launch is roughly 20 billion, but if you strip out that one legacy trust product that saw outflows, it's closer to 40 for the new funds that launched on January 11th. So it's been really tremendous from a flow perspective. From a volume perspective, I think I talk a lot about trading efficiency, and it was really cool to see a lot of new ETFs launch and within days have unbelievably efficient trading and bid-ask spreads. Because, from my world, it normally takes some time for an ETF to get to that level, to gain the volume and the asset level to where you really see those penny spreads. But we saw that almost instantly because there was so much demand out of the gate. One thing I will say also, it's interesting when talking about volumes and trading, like how do I look at Bitcoin ETFs or Ethereum ETFs, and how do I understand like if where it's trading is in line with the underlying? And we actually look at that quite closely by tracking premium discounts to the underlying. And for almost all the Bitcoin ETFs, in addition to Ethereum, those are in like the single digit basis points. So the trading has been awesome. I think it's just so cool because now investors can really get access to Bitcoin or Ethereum, and it's very frictionless. The trade costs are very, very low.
Yeah, and you spoke about the different types of investors. I noticed the state of Wisconsin Investment Board invested in Bitcoin ETFs, and right here in Jersey City, where Mumu is, where I'm filming today, Mumu has an office, Jersey City's pension fund is planning to invest in Bitcoin ETFs, according to some press reports. So how do these ETFs broaden the pool of investors?
Well, one thing that we keep an eye on is, in the 13Fs, which get reported quarterly, you get a sense of, so any institution with at least 100 million in AUM, right, has to kind of disclose their holdings. It's done on a quarterly basis, and that report comes out kind of 45 days after quarter end. So lo and behold, it's August 15th. It's 45 days after quarter end. This is when the second quarter 13Fs are coming out, which we're still digesting, but it's fascinating because you do get a glimpse into who's buying it. And I think, to simplify things, 80-20, I think 80% probably, retail. But what's been encouraging is seeing the types of names at the institutional level who are, kind of dipping their toes in, right? Getting some exposure. Obviously, on the institutional side, you do see a lot of hedge funds, but it's not just hedge funds, and you mentioned SWIB and other pensions. So we're starting to see different types of institutions kind of get off zero, right? Make that first investment via the ETFs. And then from what we can tell you in our conversations with other institutions, getting up to speed, with digital assets, it's a real, educational journey, right? So we, over and above and beyond what's reflected in the 13Fs is this kind of backlog of institutions like doing their work. So that's very encouraging as well.
Great. That's great information. We talked a little bit about how they've done. I do want to talk a little bit about some of the risks, and in specific, we saw Sunday, August 4th, that evening into the morning, Monday, August 5th, we saw drawdowns in Ether of about 22% and in Bitcoin of about 15%. This is amid increased stock volatility. It included a sell-off in Japanese equities. What do you think caused this sell-off in the cryptocurrencies? And is there any significance to the fact that we saw this sell-off on a Sunday when there weren't many other types of markets open?
Yeah, it's so I've been on the buy side and investing in various assets for nearly 20 years now, and but this is the asset class where 24/7, 365. So on a Sunday night, I was hanging out, and my phone's blowing up and I'm getting texts, and obviously there was kind of more global and macro concerns, and the yen carry trade unwinding, and so news coming out of Japan, and then here domestically, all of a sudden maybe an increasing belief that the soft landing maybe might not be as soft, and so increasing concerns over potential recession, as well as increased kind of tensions in the Middle East, and you kind of get one thing in this kind of cascading effect around the world, and when a lot of the markets aren't in the U.S. aren't open, at Sunday night, the only market to really reflect a view or to panic or whatever ends up being the crypto markets. And so it was quite volatile Sunday evening, and then obviously when the other markets or mainstream markets opened on Monday morning, we saw volatility there as well. Now a lot of it did kind of retrace, and these issues and concerns are being kind of worked through, but I think this brings up a couple of interesting points. One is, yes, digital assets are more volatile because this industry is newer and the asset class is more nascent. I think one of the things we look at is the severity of the drawdown over time. So during each kind of bear market, like how severe was the drawdown for Bitcoin and Ethereum versus say alts, and how does that kind of trend over time? And then if we look at things like technology, kind of growth stocks, is there any kind of similarity there? And kind of one of the things we found is, even with the biggest tech, firms in the world, if you kind of look at where they were in their development and their stock price volatility, 3 years after IPO, 5 years after IPO, it actually doesn't look too dissimilar to what some of the volatility that we're seeing, in the digital asset majors like Bitcoin and Ethereum. So, it is volatile. That volatility is decreasing over time. And that volatility, though, is what leads to the returns, as well as those drawdowns. But and so another thing you have to look at is the correlation, right? So how does the volatility of these returns, track with other assets that might be in your portfolio? As I mentioned, Sunday night, like all asset classes kind of got rocked, right? And into Monday and Tuesday. But generally, if we open up the aperture a little bit and we look at the correlation of digital assets and we look at the correlation of Bitcoin and Ethereum to other asset classes, we actually find that they're not that correlated, and so the volatility can be a benefit to a diversified portfolio when it's uncorrelated with other assets. So definitely a risk, but that's kind of how I think about it.
Yeah, it is very good to understand those risks. And I want the viewers to make sure that this is not a risk-free type investment. There are a lot of risks around these types of investments. And now I want to get on to one of the viewer questions. How do you see the ETF evolving in the next few years in response to Ethereum's development, such as Ethereum 2.0, staking, or layer 2 solutions?
So I think, yeah, one thing to point out, and I think it was mentioned, but so the way the current Ethereum ETF works is this is unstaked ETH, and I guess kind of zooming back a little bit. So when we were talking about in comparison to Bitcoin, Bitcoin is a proof of work blockchain, so that's where the miners are doing a lot of intense computational power to verify proofs and append these new blocks to the blockchain. With Ethereum, it's a proof of stake chain, which means validators are putting up capital, and they actually receive some compensation for doing that, for securing the network, and that ends up being reflected in the form of yield. So staked Ethereum earns some yield. Unstaked ETH, which is what it's backing the ETF currently, does not earn some yield. So I think the question was kind of geared towards, since Ethereum now is proof of stake, originally it was proof of work, but now it's proof of stake. And you do have other things in the Ethereum ecosystem, like these layer twos. How does that all impact, ETH, the ETF that we currently have? And the way I think about that is yes, if you're holding the ETF, you're foregoing a little bit of the opportunity cost from that staking yield. But if we look at like where the returns generally come from, the distribution of returns, the lion's share is from capital appreciation of that token price rather than the yield component. So it's small in the scheme of things. And then with respect to layer twos and everything and the applications that are being built on top of Ethereum, one of the nice things is that Ethereum, by being that layer one, which we talked about at the top of the call, right, that base layer, it kind of does get to accrue a little slice of all the economic value that happens on top. So whether it's happening at the layer 2 level or at the application level built in the Ethereum ecosystem, there is some value accrual back to the Ethereum token, which is something that we like to see.
Oh, that's great. I have another question here. Want to know about this recent Bitcoin conference. We recently saw the largest Bitcoin conference in the world, late July in Nashville, Tennessee. We saw speakers from a couple of Tennessee senators to former President Donald Trump. Have you spoken to anyone that attended the conference? What did they learn? What was the general vibe there?
Yeah, definitely. So, we have members of our team try to have a presence, at all these conferences. So I didn't go personally to the Bitcoin one. My colleagues did. Prior to that, they were at ECC in Belgium. I'm actually speaking at Solana Breakpoint in Singapore next month. And so, we're definitely kind of plugged into these really kind of industry focused conferences. And at the Bitcoin one, the reports I got back again from, team members, it was fantastic, and there was a lot of energy and excitement. Certainly, you had some kind of big name speakers there, and I think the vibe was good. I think certainly the comments that came out of, for instance, President Trump, but not just him, but generally speaking, I think there's more openness to crypto and digital assets, broadly speaking, and not just on the Republican side. We're seeing it on both sides of the aisle. There's a crypto for Harris kind of movement now, and some interesting things coming out of that. So, from our viewpoint, we just think this is all positive. It's encouraging. It's constructive. I think crypto is an issue that's now big enough, important enough that I think both sides realize it matters. And so I think it's a nice positive catalyst for the industry. Hopefully, regardless of how the election turns out, we'll get some more kind of clarity and some constructive clarity with respect to digital assets and regulation thereof.
That's great. So we've seen Bitcoin ETFs. Now we're seeing spot Ether ETFs. What might be some of the next cryptocurrency products to be packaged into an ETF?
I think, us along with all the other issuers are thinking about what's next, whether that's more single currency products or whether it's going to be a multi-currency product. Because once we get into a stage where maybe we have a multi-currency product, it opens up the door of whether that's market cap weighted, or you can do a lot of really creative things with indexing when you have multiple different currencies in it. So I would say a lot can come. We don't know yet, but I think we're trying to stay involved in all of that, and we can't comment on public filings. But we are dedicated to the space specifically with ETFs, and I think it's a very exciting time. Like this is just the beginning, and I think a lot of people feel that way. So it's going to be a very interesting next couple of years.
And what's have you heard anything about options or other derivatives on any of these ETFs?
Yeah, so there are some pending applications for options on the Bitcoin ETFs. We're communicating with the exchanges about that to make sure, we're up to date. And I think, the consensus is probably within the next year or so, we'll start to see some traded options on the largest Bitcoin ETFs at least. And then that'll probably trickle down to Ethereum at some point as well. But we're very early stages for that.
Right, great. And a few other questions we've had from our viewers are around a regulation. And can you speak a little bit more? And I'll just kind of put them together. They kind of want to know what these risks are around the regulation, how that works. And we obviously are getting these ETFs coming all kind of at the same time, which is not necessarily how ETFs would usually be released by regulators. Can you talk a little bit about the regulatory process and how that's been received so far?
Well, I would say, took quite some time. It was years in the making for the spot Bitcoin ETFs to come through. So I would say the SEC definitely did their due diligence. And I would also say, the regulation that these ETFs are under was existing regulation. The 1933 Act existed before to protect investors that wanted exposure to commodities like gold or oil or whatever it may be. It's not a new structure. It is odd and rare that everyone came to market on the same day. But I would say it's not a new regulatory framework. It actually kind of fit into the existing ETF regulatory framework, which has proven to be quite successful over time. So I would say to kind of keep that in mind, that these are digital assets, so the risks inherent in those digital assets will always be there, but we're working under what was an existing ETF ecosystem and ETF framework.
All right, great. So what else should our viewers be aware of regarding this spot Ether ETF launch?
Some things that come to my mind are, I think when thinking about Ethereum, say versus Bitcoin, one interesting kind of tidbit, because Ethereum is proof of stake and Bitcoin is proof of work. So a certain amount of the Ethereum supply, and it's like 28% of the Ethereum supply is actually staked to secure the network. So that's not really Ethereum tokens that are as easily circulating and that can be bought and sold on the market, right? And then what we also mentioned is Ethereum is a smart contract enabled, blockchain, right? Like Bitcoin, it doesn't really have that. And so there's a certain amount of Ethereum that's actually embedded, staked in these contracts. And so if you think about the amount of locked Ethereum supply, in whether it's in bridges or whether it's in smart contracts, that's probably another 14%. Now Bitcoin doesn't really have either of those. Maybe a couple percent on the bridges. But so if you think about the amount of supply that the ETF complex has to, go and buy, and so really what this gets to is the impact of, say, flows from like a buyer like the ETF complex on potential price. I think our baseline assumption is that since ETH is roughly 30% of Bitcoin, right? That over time, we would expect to see the inflows coming from the Ethereum ETFs to be roughly 30% of that of Bitcoin because of the difference in market cap. But what we think could actually happen is that the impact of those flows on price could actually be more pronounced on the Ethereum side than on the Bitcoin side because of these fundamental differences in these blockchains and the fact that so much of the supply is locked in staking and in smart contracts and in bridges, and so it's not part of the circulating supply. So I think that's a little kind of a fun nuance that isn't as known when people are talking about just Bitcoin versus Ethereum.
Yeah, that's something I certainly didn't know. And so, this has been such an informative webinar from you both. Thank you so much. And I'm sure our viewers have felt the same way. And I just want to remind the viewers, this will be available for replay on the Moomoo app. You can check it out, as well as some of our other upcoming webinars you'll be able to find there. And before we leave, I just want to ask if there's any last parting thoughts from our audience, maybe Megan first.
Well, I would say it's a really exciting time, and I think there's so much energy around it. So the more you learn, the better, and it's ever evolving. As Chris could tell you, there's always more to know. So stay up to date, and the ETFs are an awesome vehicle to finally get exposure and efficient exposure to, as of right now, Bitcoin and Ethereum.
And I'd say, remember what we said at the beginning, like what's happening here with blockchain technology and digital assets is you have the creation of this new asset class, digital assets, but fueling that, I think it's easy to lose sight of the technology. And really this is transformative technology that, I mean, it's up there with AI. And so this is a multi-year, decade-long, secular trend. And it's going to enable so many interesting use cases. I mean, already you can send a digital dollar basically anywhere in the world in under a second for under a penny. That's kind of a 0 to 1 game-changing type of moment. My son and I play Web3 video games where we own our assets and we can trade them. And I'm seeing use cases where they're using token incentives to actually bootstrap networks that touch the real world. So taking commodities like storage and bandwidth and compute and actually being able for those commodities, those digital commodities, to trade like physical commodities like gas and oil. And this is all enabled with blockchains and with token incentives. So the asset class is exciting, but don't lose sight of the technology and all the amazing innovation that's happening here. And we're still, it's early days. There's a lot to come.
Well, thank you again so much, Megan and Chris. It's been a pleasure to have you on the webinar. Hopefully we'll have you back soon again. You can update us on some new developments in the crypto market, as well as how this launch is going, maybe a few months into it. And for everyone else, hope you had a great time. We'll see you next time on the next webinar. This is Justin Zaks, Vice President of Strategy.